Let's get started. All right. Welcome, everybody. Yeah, I'm going all right. No, it's good. Good day. Good day. Crazy gold moves, though. Hey, hopefully nobody got caught out by this one too much. It's why it pays to, unfortunately, have risk management whenever possible. But look, for any gold long-term bulls, don't be too concerned about these kind of moves. They're natural when you have massive moves. I've got a video coming out a little bit later on that list. Planet Musk says gold. He's gold physical. It's a bit tricky. Yeah, look, that actually I said that yesterday. I said that a few days ago. My dad has a whole bunch of silver bars he wanted to sell, and he's like, he can't move in Melbourne, so he's actually not able to go sell them. But that's the thing. You're holding it for the long term, aren't you? It's a different type of investment. I always will say this, and I'll say this to everybody right now, and I'm pretty sure most people in the community get it. Investing and trading, totally different things. In fact, you should almost segregate your investing from your trading if you can. Yeah, very, very painful if you get called out. So, look, obviously in this stream, we're going to be covering a whole bunch of things. I'm going to be talking about some of the similarities we're seeing between gold and the stock market right now. I have a video coming out about that as well tonight that I'll release after this video. But yeah, basically what we saw in gold and the movement is normal for a blow-off. So this is normal for what we call a blow-off, a technical blow-off. And it usually happens after a big parabolic move. So look, gold may be good long-term for a lot of bullish momentum, but that doesn't mean that it isn't susceptible to big pullbacks. And gold's well known to be like that. If you went through history of gold and you looked at any kind of previous blow-off event like the one up here that hit the resistance, ironically, very similar time when the S&P 500 was hitting an all-time high as well. That's the kind of thing where, it happens quickly, and then it usually rebounds quickly as well, which is what we've kind of seen in the last couple of hours. So let's go through a few things with gold. I'll cover this, and then I'll take a bunch of questions, and we'll use silver. Yeah, absolutely. We'll take a look at silver. I think silver has the better base on it. And I want to talk about what I think is going to happen. So some of the things that I think are clear is I know on the weekend I talked about how this resistance zone, being the 1980, should have become a support zone. So I want to talk about how you can possibly not get stuck into just buying that area. And one of those things is to see the momentum coming into the area. So you want to see how aggressive was the trend coming in. So the aggression is very key, because if we see a very heavily selling market coming into a zone, like we were yesterday when we were just selling, that's going to mean that at that 1980 level, when it eventually does hit here, that you want to see a lightning bolt effect. And what I mean by lightning bolt effect, let's zoom that in. Because this goes for any swing trade, it goes for any scalp, it goes for anything. It's that further confirmation. So 1980 might have been a key level of support because it was resistance. But when it got back down, when it got down here on a 15-minute chart, it basically been selling off a cliff. You look at an hour, it's going to be even more aggressive. Then you get the lightning bolt effect up, and that movement, that change in trend. Notice how there's no series. There's always like a trough, a lower peak, a lower peak, significant. The trend is down on all these time frames. If you're unsure or you think it's coming in too fast, wait for the change in direction on a significant time frame. And ideally, you'd be waiting for probably an hour, and you may miss out on a couple of dollars in gold, but it will save you so many times. It'll happen on things like the yen. It happened on the yen at a key point, came in like a rocket ship, everyone got smashed, unfortunately. And you have to realize that if you're going to buy this level, then you may buy it with maybe a portion, maybe half of your trading allotment that you had in it, or whatever you wanted to do. And then the other half, you wait for the lightning bolt. Whatever helps your psychology. We're all a little bit different, so we all have different ideas. It's something I just want to bring up because I know I mentioned that level and I know it blasted it. We're talking about blow-offs and we're talking about extended markets, but yeah, I want to just clear that up. It's that aggression coming into the zone that's really, really important. So we'll just quickly reload gold here. Let me just quickly refresh that up. And then talk about where to for now for it. So here it is, obviously the big move. Now, what did it come off? Well, it came off that kind of 4-hour 200 moving average. There's the simple moving average. It formed off that. It actually did lightning bolt off that on the kind of lower time frames, but no 1 hour. It's just too aggressive right now. What do we expect from this? Well, I actually expect it to potentially come all the way back up to this 1980 and find resistance. Why is that? Well, when we do the fib of the whole move, it'll become a little bit more clear. If we Fibonacci this whole move right now, basically there's a 61.8 fib just behind these moving averages, and there's obviously a 50 just here. It makes sense for, in a blow-off market, very aggressive, volatile market, for it to come down heavily, then come up heavily, then come back down, and usually it likes to test a base. It's unlikely that gold goes and cracks a new high right now. Unfortunately, it is unlikely that it happens. Now, a lot of people are going to say it's all about bonds, it's all about this and that. Yes, that's part of it, but remember, people knew about these things. They knew they were coming. The problem is that there's always an excuse, and then that excuse becomes incredibly clear once it goes through. So yeah, with gold, I think that it could go back up to kind of like this 1980 level, find some resistance there, look at smaller time frame kind of direction and everything like that, and then it might short back down. But long-term buyers, I mean, you're basically getting an opportunity to buy cheaper, aren't you? I mean, obviously, if that's your plan, and your plan is to hold gold till 3,000, kind of like a stock market kind of play, then it's just like a dip buy. You're basically looking at it and saying, well, it's cheaper than it was a few days ago. So hopefully no one got hurt too much by this. Obviously, you can trade gold with spreads and things like that as well, and you can buy options and other kind of ways of trading it that will save you a little bit more during these times. But with CFDs and trading it with leverage, it can be a little bit tough. So yeah, move very, very quickly. Russian vaccine, yeah, and of course the Dow value. Yeah, look, the Russian vaccine, I wouldn't be getting caught up in that one too much. Isn't it only on stage 3? I thought stage 3, it doesn't really mean too much. Like it still has to go through a lot. But I know everyone's thinking it's positive right now. Remember, send in your comments, send in anything. I want to be interactive, so I'll answer any questions that everybody's got. The way I do gold is shares. Yep, fair enough. Stocks and shares, definitely a great way to do it. So they won't move anywhere near as aggressively each way as the gold CFD. Is the screen coming through blurry? It should be very good connection. Should be 1080p. Try cogging it and oh wow, yeah, that quality's bad. Straight into production and mass facture. Yeah, absolutely. Is everyone else getting a little bit blurry screen, or is it just me? Can someone just let me know? I don't want everyone to deal with that. Yeah, we'll look at silver. Silver's very similar, but there's actually a better pattern on it at the top, and it's got better support. So yeah, with gold, just the blow-off kind of phase is what I'm thinking about there. Go on to silver, very similar kind of blow-off. However, in this phase, like, do I think it's top for now? Yeah, it probably has top for now. We might hit 30 again, but we're going to be trading in this range for a little while. And basically, we've got here this resistance that became like an intervening trough. There was a double top here. The double top did break. It had the better pattern on it. I'm sorry I didn't cover it on the channel, actually. I wish I did. I did see it too. I should have covered silver. I just don't follow it as much because it's not generally as popular as gold. But yeah, double top, broke through. What do we know about double tops? Well, they're the end of trends. Again, it's come down to the 24. The thing is, though, silver has so much structure at 24. It's a lot of structure here. So we've got a lot of kind of consolidation through this period over here. And that's key. Where's silver going? Well, it's going up to this point here, this kind of 27 area. And we'll draw a fib again. And look, fibs can only be used as a kind of rough estimate. But yeah, the zone here would be that 50 to 61.8. So we're finding that resistance. We've sold off initially faster. Again, if it gets under this zone, it could go all the way to the 22. But at this stage, the 24 is very strong. I see a lot of structure through there. If we go to any other bigger time frame, like we go to the daily, we've got a nice kind of formation that happened there before it broke out high. It's hit the 20 EMA on the daily as well. So we've got some good structure. I think 24 was a decent pickup for silver. Did it go even lower? Sure. But I think 24 was a good pickup for silver. It's a good zone for a lot of people that were looking at getting into it. Is a bear flag possible? Look, anything's possible. As I said, volatility is going to be massive here. Resistance levels are going to be this kind of double ribbon moving average into the 50, 61.8 fib. And then, of course, up here at the 27 kind of 70, 80 zone where previous support will act as resistance. It's tough, though, on these markets. Are these technical markets right now? They're huge, massive volume markets. So they are massive moves, these ones. Everyone's whinging about Australian internet. Yes, we have the worst internet in the world, but we spent the most on it. Oh, good. It's cleared up for you? Fantastic. That's good. Okay, so let's talk about this S&P 500 and, more importantly, the US 100. So 2 things on silver is, before we get into that, look how far away we are from the weekly 20. Okay, we're super far away from this. It's really key. This means we went parabolic and we need to cool off. And that's why I think we're going to have to wait in this period before the next move. Now, if it gets past 30, always set the long-term alert. Now, one of the things I do, and I've done it for years now, is just set random alerts for random key levels, and I just tag them. You can do so in TradingView, you can do so in Bloomberg Terminal, you can do so in other programs. Set your crazy random alert for $30 break. You might not be looking at it, you might not even be trading that day, and in 2 months' time, you get one that says broke 30, and you're like, "Ooh, okay, opportunity." So I always set landmines, and I just tag them well. So yeah, we have that really far away from the 20. Now, what's the Nasdaq doing? Well, super far away from the 20 as well. And we know that whenever it's far away from the 20, it generally has a tendency to either slow down, consolidate, or at least kind of blow off and get back down to that 20 moving average. It has to touch it. It really does. It either consolidates or it moves down kind of marginally. And I would not be surprised at this 10,000 level getting reached at some point for the Nasdaq, because that just makes sense to what we're seeing on Apple. Apple is crazy. That's a parabolic move. That is, I know it had an earnings report. I know it had all these things, and I know that people, are really, really happy about the split. But that is retail traders getting in. That is absolutely you, myself, everybody here. We're all a little bit too hyped. Well, not me, but other people are pretty hyped about Apple, and we saw that in those figures with the kind of the Robinhood tracker. So the Robinhood tracker showed us a huge amount of retail participation. That would have been through Webull. It would have been through every broker in the world. I had people in the chat this week. Where am I going to buy Apple? How am I going to buy Apple? Everyone's on Apple train. So 400 should have been strong resistance. It should have been the time we come back to the 20, but we've got that parabolic move. And that's what concerns me about the Nasdaq and the Apple, just because I think the risk reward's getting really, really difficult here, especially ahead of the China kind of talks. So I think a lot of people are going to agree that WeChat and TikTok should have been retaliated against already. They haven't done so because they're going to go into the discussion and they're going to try to use something like that to help everybody. So they're going to try to use that as a negotiation tactic, but they're surely not happy about this at all. Shane says Tesla will hold the market all by itself up until September. Well, did you see? Tesla split. There we go. They're going to split 5 for 1, 8.4%. One of the things I mentioned in the video tonight, if you watch it, I was talking about buy the rumor, sell the fact on these splits, that's for sure. It's not that fun when it splits. Okay, cool. But does that mean it's worth 10% extra? Tesla will be worth a little bit more because there are a lot of retail traders in it. But yeah, this is crazy moves on splits. There's other potential splits out there as well. What about Amazon? What about Google? They're a very high stock. They're worth a lot of money. What if they split? We're seeing a trend here. And that trend could have 10% in it. So yeah, it's big moves there. What's happening in lockdown? Nothing much. It's boring, actually. That's why I'm doing a bit of live streaming this week. Can't go out. Where do I live? Melbourne, Australia. Oh, you're in Byron Bay? Very nice. Okay, so yeah, so with those stock markets, even the US 500 is very extended away from the 20 on the weekly. Don't ever disregard this. Look over here on this left-hand side. So this is the big bullish run we saw, 16 into 17 into 18. Only at the end of the run, and I just want to really point this out, only at the end of the run did we see it get hyperbolic, get away from that 20, and then crash in. That's a blow off. That's effectively a blow off that happened there. Now, for whatever reason, they'll always have an excuse, but that's just a straight, we went too far, too hard, too fast, blow off. It's the same thing you're seeing on gold. It's almost a mirror. I really want to show everybody that because it's the same thing. Craziness. Everyone, you can't stop the market. The market will never crash, and it does. And this is this is always the point where you're like, anyone that says bearish stuff here will get disliked. It's not a good time for bears up here. They're very unhappy. And look, bears won't win in the stock market. Of course, we know that. We know that long term. Everybody should know that because they are geared to go up. That's society for you. Unless we go into a Great Depression, and no one really wants that. Well, I hope you don't, because it's not cool. Great Depression is bad. What's the catalyst to stop the US market craziness? Shane said, something stupid, Shane. Something stupid. It's always stupid stuff. It'll be in plain sight, and they'll use it as an excuse. The elections, could just be, we're concerned about the elections. There's, we're concerned about, maybe we want, I'm not going to get political, but obviously, there are two ways here that we can go, and they'll just say, it's getting close. I would still say, and I reiterate, September is a weak month. I will do a video on this. I'll discuss it with everybody. I want to really share some hard stats on September. September is a bad month. I've traded a long time in the stock market, and it's statistically bad, and especially in the US. The US market often falls in September. It's probably that and the Santa rally, which you should look up as well, are probably the only two consistent kind of real events. I do think, though, also buying in weeks ahead of public holidays have been pretty good in the US as well. They've been pretty good, strong bull week sentiment. When will the US dollar come back? Yes, let's look at that DXY. Good. I like that. So I've been talking about the DXY, and I've been talking about how this 92.50 is pretty strong base, rejection off it. Spoke about this in the videos. Obviously, if you haven't subscribed, make sure you subscribe already and get some of this knowledge, because I think hopefully it's helping everybody out. And these wicks here, they're rejected, and that shows that quite a lot of strong bullish momentum. But we go into the daily, and obviously here, we've got this double bottom formation. We could not close above. Let's go to the 4 hour now and then really talk about this double bottom and why you need the confirmation. Technical analysis is just key levels, everyone. Like, that's all you're looking for. You cannot predict a whole bunch of moves. So anyone that comes in and says to you, I'm going overseas. Well, you can't do that now, but I'm going overseas and I want to convert money. Do you think it's a good time? You're never going to really know that, unless there's a cool key technical on, or there's a very strong sentiment play in the works. So I've highlighted up the bodies here on the 4 hour. Now, one thing with patterns, whenever you're looking at a double bottom, channel, sending triangle, head and shoulders, it doesn't matter what it is, always look for the key patterns to be on the key time frame. So here, the double bottom to me looks the best on the 4 hour. So that means I'm looking for the confirmation on the 4 hour candles. Have we seen a body close above this 93.84? We have not. If we had, it changes the game. It becomes bullish. It is not bullish right now. It is currently bearish still, and we are currently in bearish sentiment. Have we seen a 2050 cross? You'll actually say yes, because if you go in there, I think the 20 is above the 50. But it's not enough. We need multiple reasons to be in a trade. So for the dollar index, we could be seeing strength here, actually. And that might go against what you're reading in the paper. Remember, whatever you read in Bloomberg, even whatever you see on YouTube, whatever you see anywhere, it's mostly noise. And what you want to do is trade the price action, create a sentiment that makes sense, and stick with that sentiment. And if you can do that, then you'll find it a lot easier. If you actually never listen to anything, and this isn't good for my channel probably, make sure you listen to us. If you didn't listen to a lot of things, you'll find you actually often trade a lot better. And that's because you just follow what you see, what the price action is telling you. So we want to see the market come up here. I want to see it close above this zone, so a confirmation candle on the 4 hour. And once that happens, then ideally it comes down and gives us that conservative entry. If it gives us that conservative entry, then what do? We can take the distance of the move. So we can take the distance of this particular double bottom pattern. We can extrapolate that out. And then once we've extrapolated that out by doing this, we can then see if that makes sense. Well, there's a few things I like about this one instantly. I like the fact that this is basically going straight into a 200 on the 4-hour. Very key kind of moving average. And usually if you see like previous supports over on the left, it means the structure of the formation is better moving into it. I hope that makes some sense. Yeah, we'll analyze the S&P 500 during this one. Absolutely. What are we using to trade currency? I actually use Pepperstone. Look, we work with Pepperstone, and I like them. I will never recommend anything to anybody that I don't either use myself or I haven't used. Pepperstone do not have options. 40 minutes till open, Logan. You hyped? Could be a good one. I'm streaming for a reason, because obviously gold is interesting right now. What are my thoughts on the night open? Yeah, so look, that's my thoughts on dollar index. I just want to quickly bring on Swiss, and then I'll answer that question. I want to bring on a few things here, just a couple of currencies. Even if you're not interested in currencies, there's good technical formations here, so definitely continue to check them out. Let's just check out this US dollar Swiss. Wow, look at that. That's selling off now. So it's a very similar formation here, though. I mean, obviously, we're seeing a lot of Swiss strength throughout this crisis. Again, similar formation. We see it break past that 92.20. It changes the game. All of a sudden, we've broken past all the previous highs. We've got a body close above that zone, double bottom. It starts to play out. It may not do it. It's chess. One thing I noticed that when I was doing this draw up here before I did the stream is if you take this distance, it pretty much goes into basically previous support. It means the market structure's good. But it has to happen. Unless it gets up here above here, whatever, you can't look at it anymore. We just can't do it. Down hyped, Logan. You got to be hyped always. Is this being recorded? Yeah, I should release today's one. I didn't release Monday's. It was too long. I was going on and on and on. How long have I been trading for? Since GFC. But not well during the GFC. I traded poorly. I didn't know as much, yeah. Look, there's always a lot of people that get into trading around crisis periods. It's part of the reason I'm pushing the YouTube right now as well. I know that this is a popular time. Of course it is. But this doesn't change the fact that it's a lifelong skill. If you can stick it out, that's the key thing. But it takes time. I'll have a look at that, Gemin. In terms of the US forecast for the jobless report, it's a good question. How will it turn out? Well, they've been missing it a little bit. It's been slightly higher each week. We can actually look at that on FOREX Factory or something like that. Oh, actually, I want to leave that future screen open. We'll just use this one. Just quick reminder, we're seeing that move out still of the FANG stocks, of a lot of those popular kind of stocks that are overextended. And we're seeing a movement still into the banks, a sector everyone hated. Remember, if we are in truly a recovery phase, which we could be here, then these usually perform for about 3 months better than the rest, and then you move back into the rest. So it could be interesting to see if we continue to see that. Now, back on to that other question that I said I'd answer. Was it about the S&P? Might have been. Yeah, next week or two, probably a rotation into those in preparation of September. Yep. Do I think it's dollar weakness and not Swiss strength? Yeah, dollar weakness is there, but we just did a comparison between the US dollar index and the Swiss. You can see that the US dollar versus the Swiss is currently weaker, which means the Swiss is slightly stronger. Yeah, we'll look at EU. Euro US dollar is really good right now. Yeah, Buffett got in. Buffett got in on that BOA. Yeah. It's a good move for him. But look, let's be real. I mean, Buffett's a legend, no doubt. Legend of trading and investing, or investing, not trading. But yeah, basically, he probably doesn't care too much anymore. he's probably pretty chill. Someone brought up, and props to whoever this was in the comment section. It's so true. You know what Berkshire has? It has a key person risk. If Buffett died, that would be bad. Berkshire will lose and probably create good value for that day. That could be something that actually might happen. But yeah, unfortunately, look, it's the same with Tesla. What happens if something happened to Elon? That'd be terrifying. Okay, let's have a look at this jobless thing quickly. Key person risk is a thing, and I think Tesla, Elon that's terrifying. That's probably why I don't own any Tesla stock, but sometimes I wish I did. Okay, so how well have they been getting this right? So basically speaking, they actually thought it was going to be higher and it was slightly under last week. So I guess they're probably going to be forecasting slightly incorrectly again. They might be going slightly higher, comes in a little bit lower. It's still a very big number though. For this to be holding above this zone makes me start to think that there's a difference obviously between the current jobless figures in the US and what real jobs are being lost. And I think there's a lot more real jobs being lost right now, and that's the number we really want to be looking at. I'll try to release that on one video. I'll try to get that number up from Fred, because that would be good. Is Elon an alien? He's definitely a smart guy. Mass props. I think he'll go live on Mars. He'll definitely go. I feel like he will. I feel like that'll be a thing for sure. Elon living on Mars. That'd be cool. All right, let's take a look at this euro. 30 minutes till the bell. Oh, 34. Yeah, this euro is good. Okay, I've got it trapped already because I did a webinar before. By the way, if anyone's interested in coming to our weekly webinars where we talk about live market stuff, make sure you head over to fxevolution.com and you can sign up there for a free cheat sheet and get in, and they might be quite beneficial. We always talk about technical structures, things that we're seeing. It's a lot more currency focused, indices focused, commodities focused. Definitely worthwhile checking out though if you haven't already. So here we've got the euro, got this 4 hour. Now, just quickly, want to be talking about this massive trend line we've got here. So this is actually a massive trend line. There is a crazy, crazy trend line that goes over, the monthly, and it goes all the way down. And actually, if you draw this out, it hits all the peaks. So it goes through everything here on the euro. But we can ignore that to a degree. All we know is the euro busted it, and it's kind of finding some form of consolidation above there. So we go down to the daily. What's been happening? Clear bullish trend, clear good movement, nice structure formation. Something I love about currency trading. There's some great structure that happens on currency. It's where technicals really shine in terms of the views and the way that you can see things. Sometimes on stock, obviously, it'll open and it'll close, and you'll see gaps and you'll see crazy things like that, and it's not as easy. So we've got clear structure here between two zones. Notice how these is about 2 cents apart. So we've got that 117, that 119. Now that's interesting because clearly this thing is moving in a certain way. Go down to the 4 hour. What are we seeing? Well, usually in a channel or a good structure like this where we've got two sides, what happens is actually the midpoint of the channel becomes a key level for us as well. And that midpoint here is the 118. So a 1 cent move, 00. What are we seeing right now? Pretty much a double bottom coming off this level. I'm sure you could put a bunch of indicators on and you'll probably find like divergence and all sorts of things. We'll just chuck an indicator on. A few people ask me this. I like using the MT4 MACD. Just me. You could go down to a 2 hour and I'm sure you'll probably see it. Yeah, there's going to be divergence. The one thing about indicators is it's cool to have them, but they'll always show you the same thing in the same locations. They always will. So we'll go back to that 4 hour, and then what happens if it gets through this 118? Well, effectively that shows bullish movement, obviously weak dollar, and then we had weakness down to here, hopefully get that conservative entry. We've got the 20-50 cross by that time. That means that this 20 and this 50 are going to be behind. And why is that cool? Well, because when the 20 and the 50 are behind, they act as dynamic support for us as traders. So they act as that dynamic support where traders will be buying off the 20 and buying off the 50. So if we've got two ribboning there, they act as that level. We'll be getting above this 118, and then we've got a clear trigger up till the 119 from a technical perspective. Ben says he learned some of his trading stuff the hard way. Yeah, unfortunately, many people do, Ben. Oh, you traded Nikola. Yeah. Unfortunately, yeah, look, if you're shorting stocks, it can be very difficult. It can be very difficult. Markets can stay irrational longer than you can stay solvent. I should have remembered that saying. Yeah, look, fair enough. Absolutely, Ben. Absolutely. I think one thing that I would always say is try to learn a way of, look, swing trading is a great place to be. I like scalping. I like day trading. I like it all. Swing trading, though, is the most accurate way of trading if you want to trade. If you want to invest, then you just, obviously, you can buy indices and you can buy high quality stocks and just long quality, buy diversification, you know, that kind of thing. But if you're looking for trading, swing trading is really, really great. And I would always be looking at making sure you have great structure and you try to trade in that trend. Try to trade in that trend whenever possible. You can't out trade Robinhood. Look, yeah, I think with the thing with Robinhood is people forget, like, obviously we're looking at the herd and it looks like everyone made money. But the thing is, by the time most of the people in Robinhood or retail traders are piling into these stocks, it's too late. Like I was seeing people mentioning, there's that pre-market on Tesla, by the way, 6.59%. People were mentioning like, oh, I'm buying. A lot of them were packing in here. A lot of retailers were packing in here. And then we got that blow off. This is a classic case of a blow off. Nikola is a classic case of a blow off. It's pretty similar to what's happening on gold right now. Big sell off, followed by big pull up, followed by probably an aggressive buy, sell off again, back into the lows, consolidation. Almost every time it does this type of thing. So if you're going to get one thing out of this stream, hopefully it helps everyone. Think about the idea of blow offs and the structure that always comes out of them. Passive index investing, yeah, that's fun. Look, Warren Buffett's not wrong when he says that's one of his favorite types and that he'd do that if he had no idea what was going on. I will say I'm going to make a video on this though. So a lot of you might understand Ray Dalio obviously says the lost decade. Might bring this up. Let's bring this up. It's a good question. So we're going to use Euro index, I think, of some kind. Let's have a look here. Which Euro index should we use? Okay, we'll use the Euro stocks. So I'm going to bring the Euro stocks to a monthly. And do we have enough data? Of course, this does not have enough data. You have to excuse me here, guys. I don't usually use this platform. I just think it's the best for doing streams in. Because I can get any tool up. Let's see if this one has long term. Oh, God. That's not good. So the Euro stocks probably should come up somewhere. Currency.com. I would have thought this would have had it. Like big long-term history. Okay. Well, basically, if you get a really long-term history chart and you go look at a Euro index for a very, very long time, when you look at that, you'll notice that it had a period where if you were investing in the indice, and in fact, you can see it in the ASX market. We can look at it in the ASX 200. When you're in the indice and you're investing and you bought, let's say, during the peak before the GFC, it never really recovered. It took a very long time to recover. We're going to potentially see that in the US market again. It may be a time where you have to pick sectors and understand that those sectors are going to perform and that other sectors may not. So here's the bull run that happened in Australia from 2004 into 2007. That was a huge bull run. Notice we'll probably see it super far away from the 20. Actually, did it hug the 20? Okay, so it hugged the 20, which is key. It's actually good. If it hugs the 20, it's good. It still had that blow off though. Then it had that second kind of crazy run, and then of course it sold off into the GFC. But yeah, here we had the sell off 6,852 from 2007. Of course, it was a bubble, but 2007 to pretty much 1920, we did not recover. Europe did the same thing. So we could be seeing a point where you're actually going to get worse market reaction out of the S&P. You're going to get maybe only 3% per annum, whereas if you pick up the correct sectors, you might get 10. That could be what we do see. Euro 50, EU 50 is that what it comes up as. Forex.com one. Sweet. Thank you very much. Thank you, Graham. Appreciate that. All right, let's have a look here. Let's go to that monthly. And we still don't have enough data. Bugger. Go this one. There we go. Enough data on Oanda. Or is there? Kind of. All right, so here's the GFC, and then of course it sold off. It didn't recover for years. For years and years. You basically had a decade of no growth. Now, we are recovering on the S&P 500 Nasdaq because of the tech, but I just always think it's going to be interesting to push into those other sectors. I think sector picks are going to be the play over the next decade. I'll make a full video on it. That is the thing, though. I would say if you're ever pulling data here, try to pull the Oanda data. I find the Oanda data in TradingView, it's usually more history in it, which is good. Moving averages can save you. They certainly can. 20 EMA, 50 EMA, 200 SMA, possibly the 100 if you're looking at it. All are good EMAs and SMAs. The reason I use the 200 simple is I want it to be smoothed because I want the weighting to be on average. The reason I use EMAs is because I want it to be more market reactive. Exponential moving average is more market reactive to the most recent kind of price action. Very, very important. Carl, yes. Since asset allocation is so important for passive long-term investors, are you planning on doing a video on this moving forward? I am. I'm actually, look, I wanted to take all the money that I've made on YouTube so far, which is pretty small, but I want to take it all and I'm going to invest it all into the market in passive investments. I'm going to show dollar cost averaging. I just haven't really, I kind of want the blow off to occur and then to do it. I'm just going to basically invest every month. So I'm not actually going to pay too much attention to the technicals. I'm just going to invest it on the first pullback and then I'll leave it there and I'll basically invest it over time, but I'll use a mixture of different indices. And then I'll donate some of it to, I guess I'll let the community pick like maybe a couple of charities. I'll get like a 10 list or something and we'll donate money from that passive investment into there. I mean, reality is the YouTube money is it's pretty low for a channel like mine. Consumer staples. Yeah, consumer staples has been a sector that hasn't been rotated that heavily into it. Let's just quickly refresh ahead of time. Just have a look what's happening on these markets right now. Obviously, all the markets are green in terms of Asian into European session. Big moves today. A lot of commodities. Try not to trade these things, by the way. Try not to trade lumber. I know it looks cool, but what you'll find is that the actually trading the contract may not be as good as you think. You'll get swapped crazy hard. So really understand your instruments before you trade them. If you're trading something for a long period of time or investing in it and you think, oh, I think coffee's cheap, let me buy. I made this mistake a long time ago. I think I bought wheat. And then I got hit by news. Not news, weather. Oh my goodness. It was bad. It was bad. I got weather destroyed by wheat. But yeah, look, basically with these type of things, when they roll, they're incredibly expensive. And it reprices itself and redraws itself. So you won't see the raw roll in there. It's like with crude. We saw contango this year. So you'll famously have heard of the negative $40 contract. And that was because when it came time to actually technically serve it, no one wanted it. They all sold it off. It went negative 40. But the real problem was the rotation between the forward contracts and that contract. Basically, you were seeing 25% degradation for holding the contract per month. It's why TVIX and other things that I know a lot of my American viewers look at. I think a lot of those have a lot of costs hidden inside the exchange traded fund. My opinion on oil, look, long term, it'll go up. It'll go up. But my biggest thing, and I don't think anyone discusses it, how hard are these countries that actually rely on oil to be a good price, how smashed are their economies? I don't know the answer to this. I really don't. Maybe someone in the community can show me. But basically, look, yeah, I'm a bit of a bull on oil to a degree. I don't think it's long or anything like that to $100 a barrel or anything. But yeah, look, long term, oil will no doubt be used less. However, I thought coal I made a mistake on coal a long time ago. I thought coal was useless. I remember learning about it at school, and I've never changed my opinion on coal. And for some reason, coal's had some big runs on it over the years. TVIX got taken out, didn't it? Yeah. So look, I think oil can get to 50 a barrel, and then it will find kind of weakness. Obviously, long term, it could go to 70 or 80 a barrel, but I think realistically, we're in a range now where countries are going to... OPEC's not going to be strong anymore. They're going to fight each other a lot more because they need money. It's very, 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 very manipulated industry. Saudis bought into a cruise line in the crash. Makes sense. Alberta. Yeah, I've got friends in Alberta. Decimated economy, is it? Wesley, that's sad. Yeah, the real cost of this crisis is bad, obviously, for a lot of people. Check out this gold. I might go into the smaller time frames. I think, I've said this on the channel a few times. It's not ideal to be in the 1 hour here and looking at trading this kind of thing. It's going to be a bit wild for you. You want to be picking real key levels. But we are getting structure above this zone. And I did notice this before the... So we are getting a lot of structure formation here. We're getting bullish hammers coming off this zone. We're seeing a bit of strength coming in. We've got clear kind of support here as well at that 1940. So we're basically trapped on gold right now. We're trapped. So we'll see how that plays out. I mean, technically, this is a range. It's got body closes here. It's got everything you want in terms of looking to the bull side or the bear side. If it gets through these moving averages, signals back down, you'll notice that this structure range is probably going to equal a very similar range to both the highs and the lows previously. So we've got here, we'll take that down. It's going to equal that previous support. We'll get the structure up. And usually what we experienced here, it'll probably hit that 200 by the time it does it all. A lot of people say, well, why can't you trade all the time? Again, key points. I've learned over the years that I have to be patient. Unfortunately, patience is key to everything. And it sucks. Being patient sucks. It's boring. And that's why even like live streaming, coming in, having a chat with people, meeting people in the community. We obviously run a bit of a shameless plug. We run a Discord private community. We do a 7-day free trial if anyone wants to check that out, fxevolution.com. But part of the reason we created it, and even part of the reason that I have business partners in this particular education thing, and this is not the main thing we do by any means. We trade for a living. It's mostly because it's lonely when you're looking at trades. It can be like that. The reality is you may only do an hour of analysis and then you want to go talk to people. You want to understand. But that doesn't mean that you ever let other people influence you. Make your own decisions whenever possible and learn it yourself. Because if you rely on a signal service, which I know people that did, when that signal service disappears or something goes wrong or you don't understand it, when you're trying to scale your business and you're trying to scale your trades, you might risk $100 on their trades. You might risk $1,000 on their trades. But are you going to risk $100,000 on their trades or $10,000 on their trades and sleep well at night? Probably not. Wesley says that he has the FOMO. Yeah, Wesley, don't worry. We've all been there. A few weeks ago, everyone was FOMOing on gold. About 17 minutes off the open. Let's have a look how everything's going on. Check that Nasdaq futures as well. We'll go into the smaller time frames and we'll do the S&P 500 as well. I know a lot of people on this channel love the S&P, so we'll cover that. Look, we're still holding this 20, aren't we? I mean, it's been pretty easy buying off the 20. If you just bought the technical 20 every time and did nothing else, just bought, you'd be fine. But eventually this will break, and eventually when it breaks, as I said, it will want to hit that 20 on the weekly. It will want the 20 on the weekly. I stick with that. So yeah, we've just got really a period where so many touches here. So many touches. Bit of a weakening here. Obviously a break high. Did go up. Kind of thinking it was going to go that 11,500. We're finding weakness due to this supposed stuff that's going on with China and America. But for now, trend intact. Go over to the US 500. For anyone that's a new subscriber or new viewer here, remember to do a lot of your analysis on the SPX. Make sure you do your analysis on the main market, not too much on futures, because what futures will do is they'll give you a lot of fake breakouts or low volume sessions. So I just want to just reiterate that. I firmly believe do the analysis whenever possible on the SPX, but we are live here, so we might as well do the live. How do you put stop losses based on risk reward ratio or your risk appetite? Okay, so good question, Javed. When you're putting stop losses on, the best way to do it, you want to always be thinking about, well, firstly, some trades are actually going to not present a good stop loss area, but try to use price action whenever possible. So let's say, let's say you're buying here. Where would I have to have my stop loss? Well, the most conservative stop loss would be under here, the 29.83. And that, you're needing a big move at that point, obviously. So that may not work out for you. Maybe that's the most conservative stop loss. Now, if you're looking for a smaller move, well, then you have to go down to the smaller time frames and understand how that price action is working. So how is the market moving through this area? Has the market, maybe you wait for a bullish hammer off this zone, maybe like this one here. When you've got the bullish hammer and you've got the structure coming into it, it gives you that formation of the base. So here's a good example of where you've got some structure, you've got a 4-hour bullish hammer. That's probably signaling that it's the end, it's time to go. We've got clear support through this line, and then you just put your stop loss behind the price action. Be market adaptive with your stop losses and market adaptive with your take profits. Never just go 50 pips or I want $10 out of this trade. We all did it. Hey, I did it. I remember those days. They were good times during the GFC. I said every day I wanted to make 50 pips. I didn't consider the risk. I didn't consider anything. I just wanted 50 pips. And by putting that pressure on myself, I gave up a lot of money as well. That's what happens. Do I use pivot points when trading indices to identify key levels? I noticed a few people on YouTube use them. Yeah, they do use them. And I want to bring them into some analysis. There's nothing wrong with pivots. A lot of people are actually making a lot of calls based on R1, S1s, S2, R2s and things like that, and they're basically giving ranges and calling them other things. Nothing wrong with pivots, absolutely. The one thing is, though, it's like any tool, Graham. It's a tool that you use with everything else. I firstly go to a chart. I sometimes have moving averages on it, but I'll often just go in there. It'll be completely naked, and I'll just look at the structure, look at the formation, look at the kind of psychology of the market, and then move from there. 17 past, so in a few minutes. And then when I've got that structure and the formation, I'll bring on the pivots, I'll bring on the indicators, those kind of things. You'll notice I don't bring up indicators very often. It's mostly because I know where they are, but also I know that they're not going to give you any extra edge. They're just going to help your confidence. So say like here, when the market comes back and pulls down on some time frame, you're going to have oversold stochastic. You are. The oversold stochastic will be giving you confidence to go inside in the direction of the trend. Well, that's good. But it doesn't really help me because I know it's going to be there. Tesla over 700 PE. You have to ignore PE on that stock, Wesley. It is a trade stock. It is not a PE based anything. That's what's been hard with me even with Tesla. Like I considered, this is the modern new age. This is the new age, even newer than me. The idea of crazy 1,000 PE stocks that are suddenly worth that and worth more than Toyota and things like that. It doesn't make sense to me. It's kind of like how Buffett might not own it because Buffett would say, well, I don't know what that is. And I don't think that'll end well. Therefore, I don't want to get into it. Well, he just doesn't do it. You don't have to. There's other ways to make money. Planet Musk says, I like your top-down approach. I started paying close attention to monthly candles, bodies last year. Good, Planet. Yes. You can trade a 5-minute chart, but you still should understand the market direction. Why is that? When you look at a monthly and you know the direction and you just go, oh, it's bullish. And then you go and look for only bullish scalping opportunities. Each one of them will be giving you a few extra percentage points of success. And that success makes the difference. Check silver again. Yep. Let's go down the smaller time frames. Obviously, we mentioned the structure at 24 acted as good support. 20 EMA touched and found support there. Very similar kind of setup as gold, as we were talking about. We expect it to pretty much do a standard kind of blow off where it comes up, tests over here. This kind of is this 50 to 61.8 fib area. Find some resistance. Nice little move up here. Similar to gold, probably movement right now. I assume gold's moving up. 1943, yep. Go back over to gold. Yeah, so silver's looking good. Everyone's very interested in silver. This only happens during crisis periods. Remember, silver, gold, all of these trades, especially long-term investment, they have very specific time frames on them. They last for a couple of years. Be good to use the fib indicator properly. Yep, we can do that. Fibs are tough because some people go body to body, some people go wick to wick. I personally go wick to wick. This is a clear bull trend in terms of this time frame. So if I was drawing a fib here, I would, where's my fib? I would be drawing wick to wick. Now, why do I do wick to wick? And when I'm always talking about body to body, I just find it to be the one that most likely is drawn by the most amount of people. Ideally, you actually want as many people as possible seeing what you're seeing. And why that is because you kind of actually want that herd mentality in your favor. And what you'll notice is the retail herd love to go against the trend. So they'll actually all be doing the wrong thing anyway. You and I will usually be doing the wrong thing. That's unfortunate, but it's true. So wick to wick usually for fibs. No worries, Benny. I'm glad you're learning a bit. That's good. Was 2019 worse than 2020? I don't know. It was pretty bullish for the market. I thought 2019 was all right. 2020 sucks in Australia. You know, shout out to anyone in Melbourne, the Melbourne crew. Just want to go outside. It's kind of good in America. You do get freedom. We don't get freedom. New Zealand doesn't get any freedom from that aspect. But, you know, it is to try to save lives, I guess. Tesla will 5 times from here. Wow. Hey, look, you know, that's the thing with big bubbles. It's possible. But if that happened, Planet Musk, isn't Tesla worth, how much is Tesla worth right now? How much is Tesla worth? Just quick shout out. You need an economic calendar. One of them is FOREX Factory. You could use that. Oh, what am I doing? What are we at? This market cap here, 256 bill. So that'd be way too much money. Why don't we like gold and silver? There's nothing wrong with gold and silver. But from a technical perspective, they become hard to trade when they're in super aggressive trends. And what I mean by hard to trade with huge statistical advantage. Being on the short side of Tesla would have been disastrous. Yeah, unless you sold it during the crisis and ran away. Yeah, yes. Like Tesla certainly is a stock that I would never go against it because of the nature of how it trades. It just has a huge amount of following. It just trades really huge. So let's look at this S&P 500. We'll actually go month down here and just go through it again. So I'm going to draw, usually I draw bodies. I'm just going to draw the wick because I guess, look, when we're talking about all-time high 3,400, that's certainly very key. Now, what do we know about what happened with, another thing, what do we know about what happened with gold and silver? Well, they hit that 2,000 for gold. It went slightly through it, and then it did the blow off. So another thing is this is actually going to be that time where you really test the market in terms of how far away it is from its moving averages. So we've got here the monthly. We're just going to draw that. We will note, though, that down here at the 3,000, this is going to be huge buying now just because previous resistances, and we'll have moving averages and all sorts of things. We know what's at the 3,000. We know there's a lot there. So when we go down to the weekly, you've got that 3,200 bodies. They'll now act as buying zones. So unfortunately, for people who have missed out, these will all be buying zones now. There'll be strong buying through all of that. There'll be strong buying at the 3,000. There'll be strong buying at the 2,800. You've got clear kind of 200-point ranges all the way down, if that's what's going to happen. If it gets through the 3,400, I mean, the obvious trade is, even though it might feel wrong, is to wait for it to come back down, test the 3,400, and probably take it long. We'll go into the smaller time frames now. 5 minutes. Get hyped. Logan, you there? I expect you to play a bell. I should get a few sound kind of recordings and stuff and put them on. Make it a bit more funny. So yeah, there's the weekly. Go down to the daily. Again, we won't use any particular indicators at this stage. Why? Because there's no need to. They won't really tell us anything. Again, with just a bit more experience, that's what usually happens. On the daily, we obviously see that first initial sell-off. Now, what do we know? Well, if it breaks past this wick, it's pretty much just going to crack the 3,400 easily. It's probably going to do that. There's a fair rejection here. We're starting to get pretty far away from that 20, which could mean that we're having a pullback. I mentioned at the start of the week, 3,280. They'll be buying there. Previous resistances. On the weekly, we know that was that wick point. 20 as well. There'll be strong buying there. Probably draw a fib here as well. Let's have a look. Don't draw too much fibs because they just generally just curve fit. You just curve fit them for what you want. So I could just say, oh yeah, it's 50 fib there. It's all good. But really, there's not too much going on there with the fib. So daily is just looking a bit bullish. I think where it becomes more interesting is really what happened near the close yesterday. So we saw that sell-off. Why did we see that sell-off? Was it because of the concern over gold? Was it because people are starting to get concerned about valuations going into everything else? US futures are up. Let's hope it holds. If you're long, absolutely. Logan's trading Tesla pre-futures. That's what Logan's doing. He's in the pre-market. You're buying everything, Logan. So yeah, the sell-off at the end of the day is what kind of interests me. Let's have a look at the 15-minute. Let's go to the 15-minute. So if we look at this, and we'll load up that SPX. Load up that SPX. Go down to the 15-minute as well. So this is obviously the real market, not the futures. Take a look at what happened. So it sold off pretty heavy into the end of the day here in the 15 minutes. And that's important because that means that obviously people weren't keen in holding it. And there was also probably a bit of bigger trades coming out. So in profit was coming out of a few decent funds. Check Apple. Absolutely. It's on the video tonight as well. Yeah. Feel free to ask any questions, anybody coming into the bell. Always happy to answer. Remember, if you have it doesn't matter what your question seems like, if you think it's stupid or not, someone else will be thinking the same thing. And they'll have a very similar question. Futures have been wrong like half the time the past 2 weeks. E.g., yesterday it was up around the same as right now, 0.5%, and then ended down 0.8%. Yep, absolutely. That's why I say look at the real market, ignore the futures. The futures have never been a good indicator of anything, really. I mean, sometimes they will, but the problem is it's too coin flippy. You want to see where that real volume is. Let's face it, the American market, that's volume. That's where it's at. Pound yen, yeah, not bad actually. I'll check that out for you. Let's stick here though for 2 minutes. Let's check out gold. We'll probably do. Just thinking. Might set up a quick screen here. And we'll put gold on next to it, I think. I think we'll go gold. Yeah. Let's load that gold up. Scroll under the 15. Get rid of these MACD indicators. Don't need those. And we'll use the futures. Why not? Coming in. But yeah, the real market's where it's at. You ask any of the big traders, they'll always say that. Pretty much every move will turn parabolic, yes. Eventually you get a parabolic move and then it goes hard. Yes, I'll look at Facebook and Apple after the bell. Tesla up 6%. Yeah, absolutely, Javed, because they're doing a stock split and everyone gets hyped. Why are there not more likes? I don't know. If you do like it, make sure you do like it. It does help us out. YouTube's all about stats. Here we go, 11:30 for me. Your bell open. All right. It's always like exciting coming in and then usually like, But it will be interesting to see how gold kind of plays out here as well. So you see it hit that resistance instantly, move up, obviously coming through. This is the US 500. Ignore what, this is gold, this is US 500. Logan, you there? Bring out the bells. There we go. Thank you. Shorting Apple, hey? You're brave. You'd want to probably do it with option spreads and things like that. I think you get stopped out a lot in CFDs. Could be dangerous. All right, so pretty strong movement, momentum coming in. It really doesn't mean too much on the bell opens. Actually, a lot of the focus that you should put everything else on, though, is at the end of the day. See what they're doing at the end of the day. If they sell off hard, especially after kind of matching, then that means that the big funds are like, get out. So today will be interesting as well, because yesterday we saw that sell off, but we had a pretty crazy move in gold. Will today be the same? Up early, sell off after. We're clearly at a point where it's hard to trade this zone. We haven't made a new high. We haven't, if you're looking at, key kind of opportunities and levels, it's not really there yet, I don't think. Thoughts on natural gas? Yeah, it's okay if you buy it in shares. Very difficult to trade it. You get ripped up by the contract. Will gold price come into end of August end, go up? Well, I just mentioned before, I think it's in a bit of a blow off. So basically we're going to see the top in for a little bit and then probably huge moves each way. A lot of volatility. Probably a pretty big move up as well. Aggressive move up. Look at Tesla chart recently. That kind of action. What happened when it went to 1700 the first time. Do technicals work on news-based events? A great question, by the way. I like this one. Example, gold sold off on the Russian vaccine. That's an excuse. But it looked like all technicals were oversold. How can we think that gold sold off on a Russian vaccine? Like, really? I mean, it's not even stage 3. I don't know. Maybe a lot of people will disagree with me on this one, but to me, the rest of the world's not going to use that. And it's just like, it's just written in papers. That's an agenda, in my opinion. But news will beat all technicals, yes. What will happen is that markets usually move towards, especially with scheduled news, they'll move towards a key resistance or key support. Then the news will come out, like a non-farm payrolls will come out. It will break the key resistance or key support, and then it'll give you a conservative entry, hopefully. Yeah, they're doing phase 3. But if you look up vaccines, and I'm not a medical expert, someone out here is better than me at this, but I understand, as I understand it, there's a lot of failure that can happen in all of those phase 3, phase 4, that kind of thing. Could be wrong, Shane. Could be wrong. But I don't think that's the true reason. I think that's the excuse. So technicals work during news events. They do, but it's all about making sure that you've got the key resistance, key support zones. Wait for the break, wait for the confirmation, then trade based on that news. And then what happens is all the little bits of news that come out after that, like the CPI, the PPI, all those types of things, they all pack into price. So they all actually come together to form the study. And that's why when you're on a trend, all the news events will actually help you. There's a statistical chance that when you're in a trend, the news result will help you. Here we go. Maybe new high here on the 15-minute futures. Go over the SPX. See the gap up of the real markets. How can you tell if the price is going to find support or resistance at the zone? You don't know. If the price has never been tested before, technicals will not necessarily work. It's purely based on psychologicals. Like we knew that the Nasdaq would find resistance at 11,000. Why? It's 1,000. That's it. It's a psychological. If I was trading the Nasdaq and I was thinking, where am I going to take my profit? I'm at 10,800. Well, of course I'm going to try to go 11,000. But as a trader and long-term investor, and just been around the markets for a while, I'll take it early. I never let it hit there. It's like, why did gold stop at 1980? And then sell off heavily, and then buy back, and then crack 2,000. And it didn't just hit 2,000, just went bang. You know, we look at the market, it just went bang. Absolutely. Just boom. Easy done. Hey, Paul. Correlation between gold and GLD. I'd have to have a look at it for you, Paul. I'll send you an email about that tomorrow. Yeah, treasury yields, of course, have risen. Yeah, absolutely. Will they go flat? Well, look, they had to go up, otherwise it wouldn't be very attractive. Look, they're not attractive anyway. For most people, bonds are horrible right now. They're the worst they've ever been. But the thing is, money has to go somewhere, and we have to have diversification. Most investors will always have diversified portfolios. People saying due to the vaccine, Russia vaccine announcement, gold price dropped. Is that relation to the COVID vaccine and gold price up or down? I really don't know if that's necessarily it. I mean, obviously, you could draw the comparison between the idea of turning the stimulus off and then that affecting gold, because we're all going to get out and it's all going to be okay and everyone's going to be vaccinated. That's really the main kind of thing there. But yeah, Logan says master of the political game. Possibly, yeah. 96% fail phase 3. Thanks, Smacko. There we go. That's not my statistic. That's not a good statistic to be going, oh yeah, gold deserves to be busted because of that. It's because it was too parabolic. Remember, like, one thing, every time I've ever seen a big parabolic market, it always gets cracked by the same reason. It's always like, yeah, the reason why it sold off is this, but it's not usually even that. It's a mixture of things. This one here is a clear retail participation, overhype, hits a key level, cracks it high, bang, blow off, let people in, steal all their money. Standard thing. If I was going to use one moving average, which one would it be? 20. The 20. No question, Carol. Absolutely. All right, we'll have a quick look at it here at Apple. So Apple's up slightly, 1%. Let's have a quick look at that heat map as well. With Apple, look, it's just kind of really far away from that 20. I still maintain that that's too far away right now. Let's go down to the 4 hour. Are we seeing any structure kind of forming on Apple? I mean, we do have some structure forming here, but I don't think it's strong enough yet to make any discerns. I mean, it's just clearly incredibly bullish. But would I buy it here? Probably not. Would I sell it here? No. It's just not for me. Not for me, this one. If you're in it, though, it's all cool. I love Apple long term. Absolutely. How do I see BTC? Yeah, I'll look at BTC because it has a cool technical on it. Let me just bring up BTC. I'm actually surprised Bitcoin didn't sell off more. I will definitely say that. I thought it would sell off heavier with gold just because that would make some sense because of the asset class and the way people view it. I love this zone so much, 10,500. Technically, it's so good just because you've got, and there's strong resistance at 12. I just set alerts for 12, set alerts here. Obviously, if you treat this like an inverse head and shoulders, left hand, right hand, shoulder, head, then you're signaling a very large move. Someone said 17,000. Yeah, I mean, you'd just be guessing up here. But, I mean, where it went last time, you just want to go and have a look over there. And you know that there's that 16,000. So, could go 17, but 16 would be the next stop. So, you pretty much probably see it stop at around every $1,000. Bitcoin likes its thousands. It's, again, traded a lot by retail investors. So, it's going to like key psychological take profit zones. Understand your instrument, really, I guess is what that does. Where do I see it long term? I have no idea. I don't know the tech enough to understand whether Bitcoin's got it for the long term. Is it the beginning of the internet? And then something else comes and smashes it? Or is it the real deal forever? Yeah, every 1,000 is going to be tough for Bitcoin. 13, 14, 15, 16. They're all going to be key levels, unless it just goes parabolic. Obviously, anyone that was getting it down here at 4,000 did all right. Okay, let's have a quick look at the screeners. I'll just quickly load up the screener, finviz.com. If anyone doesn't use this website, it's good for news screeners as well. Definitely very, very good for that type of thing. It's a cool website. It's free. I use mostly free resources for the internet and for the YouTube. I do that just because I don't think it's loaded yet, but I do that because I think it's better for everybody. You know, if I use paid, I don't even think I show paid resources. So that's why I don't do it. So a lot of people are saying 10-year notes, of course, was a big thing about gold as well. Am I going to look at any trades today? I'm in some already. There's not too much for me right now. I got some key zones I'm looking at. I talked about the euro before. It's definitely one that I'm always looking at. In terms of stocks, pretty much positioned the way I like it. Yeah, Australia releasing a lot more. Yeah, absolutely it is. Absolutely it is. All right, look, I think I might cut the stream here today for everybody. I've got a video to release. It'll be coming out probably in about 10-15 minutes. I'll just finish the final editing. It'll go through some of the concepts we talked about today. And obviously, I really appreciate thumbs up, comments, all that type of thing, subs. And yeah, thanks everybody for attending. Hopefully you enjoyed the live stream. We'll do more of these if everyone enjoys it. I'll make sure this is cut up so that you can watch it at a later date as well, if you want to. Market Watch and FinViz, I like both. They're both great. Happy investing, everybody. And good luck this week. Remember, always have a plan and trade as best you can within that plan. Always have a stop loss in place. If you're long-term investing, it's a bit different. But remember, investing and trading,